He's founder, investor, and author. His mission is to create a change in the global startup ecosystem and ensure fair access for entrepreneurs from vulnerable communities. He's also a general partner at Blackbox, a Silicon Valley nonprofit organization empowering entrepreneurs all around the world. In this episode, he shares insights about the fundraising process and what you need as a founder to succeed in the fundraising for your startup. Without further to say, listen to this episode of the Montrepreneur Podcast.
Well, thanks for inviting me. Very happy to be here and chat with you and talk about entrepreneurship.
Thanks a lot. Ahmed, I would like to introduce you a little bit, but after that, I would like to hear your story from your mouth. So you're a social entrepreneur. You're Syrian. You worked you started your startup I think maybe 15 years ago or something like that, very long time ago, and then you wanted to support vulnerable communities after the war in Syria, and you mentored and advised many entrepreneurs on the way and many startups, and you gained a lot of knowledge in that way. After that, you worked as an early stage investor, and you have very deep knowledge in the fundraising domain. So I would love to hear a lot about you more, and firstly your personal story.
Yeah, absolutely. Maybe we go back in time, not too long, but I started as a founder when I was studying university. I was interested in on entrepreneurship. I wanted to create a company, and then a friend of mine, we started a platform that people can do customized gifts. It's called the Joy Maker. That was back in time in Syria, 2010. We didn't call it startup. We didn't know this is a startups and there's a lean methodology and there's a process to do so. We was just having a problem. We would like to have something special, customized, wasn't available in the market. I thought, okay, maybe we do it. We did some good work. We launched a couple of products in the market. We got our angel investment. We received a check from an angel investment. Again, we did not call it an investment. It was someone would like to help and support. We take money. We give him some part of this company. We've been trying to grow the company, but sadly, later after, the country went into conflict in 2011, and our investors, they had to leave the country. The market changed. It wasn't the right time to sell gifts during conflict, during war, and then we had to shut down. Not because we did anything wrong, but just the market changed. That was very kind of changeable moment for us, for myself personally, and the team as well. After that, I also joined a number of startups. Who's working in the Mena region, Zumal, has been based in Beirut, and I learned during that time moving between the ecosystem in Damascus and the ecosystem of Beirut back then was very kind of thriving ecosystem. Many of the entrepreneurship hub was based in Beirut. That having a good idea is not enough. The supportive ecosystem is very viral in the success of the entrepreneurship. And this is where I get my thoughts and believe that we need to build the ecosystem, that we have to be able to help the founders. So I moved from the side of being founder to the other side where I was trying to build and help the ecosystem, doing some kind of workshops, meetups, gathering founders around. We did the startup weekend, Damascus, 3 versions of the startup weekend Damascus that helped some entrepreneurs to put together their ideas, meet the co-founders, launch their ideas. After that, when I had to move to the US, I continued working with some organizations. We put together also pre-accelerator program for the Syrians that was based in Lebanon, and people fly in and come and attend, which helped more than 400 founders who participated in the program throughout the years and help them with mentorship, access to funding, grant investment at that stage. I also later afterward joined Techstars as a regional manager for the EMEA region. Techstars, if people doesn't know, it's just could be Harvard, Stanford for accelerator program for entrepreneurship. It's very well-known accelerator programs in the world with 55 accelerators. So there I was able to learn and kind of put down like and work with the different founders. It was wanted to change the world, create the more global ideas. Fast forward today, I'm a partner at the Blackbox. I'm a general partner at the Blackbox. Blackbox is Silicon Valley based founder focused platform. What we do, we try to help entrepreneurs. We had our Blackbox Connect, where non-US founders come together, live together in residential experience program in Palo Alto, where the company is, and live just get to explore and learn more about the ecosystem in the Silicon Valley, from the wisdom how this ecosystem operate, the networks. More than 400 founders participated in the program. Many of them, 90% still operating and growing. More than 30 exit from the program. Those people continue to grow, and they raised 1.5 billion in total. Now we try to also go back, not just to help people get the Silicon Valley, but how we can get this learnings and the stuff that we build during there to the MENA region. So my partner Fadi and I, we are on a mission trying to help diaspora founders, specifically people who have to flee their country because of the war, because of the conflicts, because of economy, because of environment. Anyone who had to leave their country and start over again from the zero, and they come to participate either through our accelerator program that we currently operating. We are in a mission also to help them access a fund and get investment and resources just to solve a real problem they are facing. So that's mostly that's kind of my background. Adding to that, I love writing. I published Entrepreneurship and Conflict Zone, Entrepreneurship in Exile, and some other kind of reports as well to talk about entrepreneurship and this demographic of people that we just described. So yeah, that's mostly about my a little bit on myself and the background and
Good. Thanks a lot. I would just summarize it in one word: inspiring. Thanks a lot.
Thanks.
You went from a founder to helping other founders do stuff. How would you describe this shift? I mean, being on this side and going to the other side. What did you see? How did you describe that?
It's pretty much kind of the same, to be honest. I know this is kind of surprising, but yeah, when you create a startup, you need to identify problems. You need to identify your customers, how you can serve them, what's the solution will be for this, and how you can build it and scale it. And that's why we try kind of to do when I move to the other side. Mostly, it's not other side. This is still part of the ecosystem, but mostly in terms of we need to find the problems. We realize there is a problems for people trying to access entrepreneurship. Entrepreneurship can be built everywhere, but access to entrepreneurship is not the same. There's still many ecosystem, especially where we're coming from in the MENA region. They're still underdeveloped. If you are away from the capital, you don't have the same access to entrepreneurship. So we try to, and access to investment is not easy for many founders due to their background or some out of their hands circumstances. They don't have legally registered yet, or it's hard for them to for mobility constraints. They cannot easy for them to travel from place to place, and some other challenges and issues. So we try to democratize entrepreneurship and democratize access to investment, and we try to help. So still here, you need to identify, this is the problems. If you are a VC fund or accelerators, you also need your limited partners, or you need your sponsor. So it's the same as fundraising process. You need to figure out ways that you can you can actually get this money from, and they are just like your investors. You need to report to them. You need to make sure you're making a great impact financially and socially with those partners and limited partners that you currently have. So there's not much of a difference. It's just completely the other side. And we see many of the people who once been founders and exited, and they do it.
Yeah.
I don't have this exit sort of things. I've seen people doing it themselves, and I learned a lot from them throughout the process. Yeah.
Good. Through that journey, you just mentioned, you documented that in many books, and you talked to entrepreneurs that were like from these communities, what was like the most interesting stories, or one of the most interesting stories you ever heard about, these challenges you are talking about, like not being able to access the finance system, not able to, etc., etc., not having the same fair ecosystem.
Yeah, it's always inspiring to listen to those stories and the perseverance of those people. Like, despite those challenges and the struggle they face in their life, they can continue and try to grow and have a solution for their own problems and for the societies they are served. Whether it's still in a conflict, like with one example, people who's now building startups in Syria, or people now trying to operate within and a huge uncertainty like that's happening in the region, especially like founders in Lebanon, founders in Palestine, and elsewhere. There's like that's alone tells you a lot as well. In that sense, we also noticed the great inspiration, like raise of female entrepreneurship in the places of conflicts. Maybe because many men they had to leave the country, or they participating in this conflict in some places. So women feels like more responsible about supporting the families. So it's more of a need. Another thing was like a great kind of inspiration as well is that many of those founders, because of their circumstances, is not create they're not creating a companies because they wanted the next billionaires, or they want to be the next Elon Musk or Mark Zuckerberg. It's survival kind of entrepreneurship. This is the only options left for me when unemployment is very high in your ecosystem and no one creating a job, or you're having so many problems and you cannot rely on the
Yeah.
system to solve those problems. You need to step in, and you see people, oh, there's a problem for people to access education, and I want to build an education platforms that helps people access investment, access education and knowledge and resources, or others who like, oh, many people struggling to find a job. Many handmakers, handcrafts people, they cannot find a job or sell their products. I want to build a platform that help them sell globally. So they try to solve solutions for the problem. So this instance of survival, as well as being active in terms of solving the problems for
Mm.
people, that's always an inspiring.
Good. You just mentioned that the problems these communities were working at were completely different from other parts of the world. For example, you mentioned like education, for example, as an industry.
Yeah.
What other industries would come also to your mind when you thinking about like the whole ecosystem in the MENA region?
Yeah. Well, MENA is a big region. MENA now,
Okay, yeah.
MENA. But if we can split MENA, like you have the Levant region, and then you have Egypt by its own, like a kind of ecosystem. You have the North African, Arab North African countries. You have the GCC. It's really like a kind of mixed and conflict. We see in the GCC a lot of e-commerce
Yeah.
happening now. A lot of new tech companies coming there. In the Levant region, I would say like mostly also like health tech has been there.
Mhm.
E-commerce a little bit on that side, education more, and we've noticed a lot of people also like in that region, because it's a small market. They needed access also to foreign currencies, so they try to create a companies that they sell for outside, so it's not just like locally.
Mm.
So they can obtain and survive their businesses. We talked about the challenges, but also there's a lot of opportunities as well
Mm.
in those geographic locations, and that would be like an important message that we give for people who's listening. Is not just, oh, there's a challenges and then I'm in uncertain situation. There is a conflict. There is a war. Yeah, absolutely, and those are like the very very tough challenges that we try to find out. Another advantages you probably have, those are like fresh market, so there's not big competitors.
Yeah.
It's not like in the Silicon Valley you might provide a product, next day you find out someone big is copying this. Like if it was successful, someone is copying it, and you're out. Like, and we have a lot of stories of like Facebook copying Snapchat, or I don't know, Twitter copying Clubhouse. and put them out of the market. It's a fresh market. Access to talent as well. You have a lot of fresh
Yeah.
graduates. Maybe they don't have, sadly, because of the high unemployment rates, they don't find a job easily. So you can hire master like degree people or even PhD to work with you, like an AI educated people, which is a very good education, like technical background education. So that's very easy for you to find them, easy for you to hire them. They not require you, I don't know, six-figure salary just as an entry position. So that's another like an important things that you're gonna look at. Like, okay, I have those tough situation, I understand, but I'm also can take an advantage of the current situation, try to focus on building my product locally for now and test it like more of the beta, and then try to expand it and scale as quickly as possible to reach out to more of a global market and obtain this work, like the momentum of building this company and try to go global from
Yeah.
there. So that's the advantages when we talk about entrepreneurship in the complex places and or fragile places. And there's also definitely a lot of challenges too.
Cool. That's I believe that. I mean, I traveled like also to many countries, and sometimes I just look and say, okay, um, like you just can copy a business model and do it exactly. Like you don't have to be innovative. You just copy a business model. You just the problem is there. You know the solution. You just have to like do the action. And there's like a lot of opportunities in a lot of like developing countries.
Yeah, absolutely. And those challenges also, it's not bad to copy like copycats.
Yeah.
This is the like our MENA region is the, I'm not gonna say like full of copycats. There's definitely original ideas that come there and customized to the MENA. But if you can customize something to the MENA, like the biggest exit that we have, Uber for Kareem, Amazon to Sue.com, those like available, like it's not like a unique idea, but it was well customized to fit the MENA region and to fit the
Yeah.
MENA needs. So if you can do that to your own country, that would be a great start, and that's give assurance also to the investors as we kind of talk about like more of the fundraising process. Is the model been proved, and like it's a
Yeah.
proven model elsewhere. We find a way to customize it to our country needs and challenges, whatever. So that's make it easier for them. Oh, I understand the market. I understand how it works. I know what's the challenges that are going to be there. So it's easy for me to invest if they want to be investing.
100%. Okay, let's zoom out, like out of the like talking about entrepreneurship in conflict zones. Let's talk about fundraising. I have an idea. I have proved the idea. I have a business model. I would like to grow like my business. What do I need, and how can I start?
What you need, like first for fundraising process, and you need to figure out, okay, is it the right time for me to fundraise or not? And that simply means like I have a product. Maybe let me take one step back. Who are you going to fundraise from? If it's an angel investor, so this is people in your network who believes in you specifically, kind of things, or friend of family who believe, okay, I know this guy, he's smart, he graduated from good universities, always having a great degree, could be, I don't know, like your angel investors, maybe you're a professor in the university, and I know this guy has been smart, he's very active. So great. So at this stage, you're not required to have, maybe you just have an idea, you put the business model, you have an MVP, and you fundraise from those people. You just give them like a safe note or convertible note, whatever it's the agreement is. If you want to go to venture capital, here's the serious of the business shit show. So first, you must have your products. Definitely, you must have some validation that this is something is working. There's a proof that this is working, and maybe you don't have the product market fit in the early stage, like seed stage, sort of things, but you have a complete team as well. It's very hard, like to go to VC. It's like, oh, I'm the only one working. My co-founder is a part-time, studying and whatever, and try to accept a fundraising. A lot of people, and that's like how it takes. A lot of founders sometimes misunderstand the venture capitals and how it works. At the end of the day, like as a venture capital, we have people that we report to, and this is not our money. This is the limited partners' money, and we have to guarantee some returns. So we have to make sure that we give them the best, and we need to do our due diligence process. We need to vet the startup idea, and we need to make sure that we are investing in the good companies. So you need to also search your fundraising process, the venture capital you're going to reach out to, who do they invest in, at what stage, at what sectors. Some venture capitals like sector focused, maybe some of them only invest in tech, some of them only invest in green tech. So that's also important for you. But once you master, like, I'll lock my team. Okay, we have a good team, we have a complete team, and we are strong, we are connected, we work together, and synergy is very high. And then I have the product. I validated my product in the market, not through a survey. It was like, oh, I asked 100%, and 99% they said they would one day buy my product. That's not like really a validation. A validation will be just really actually seeing, okay, I have the product in the market. It's been downloaded by this time, and maybe first month I'm only get 7. Second month I get 35. Second month I get 92. So you see, there's a growth that's happening next 6 months, 3 to 6 months. And then this is like could be a very kind of important steps to go ahead and then just try to fundraise. Some common mistakes we see that people, they don't have the complete team, so they have like this problem, or they don't have like their product is not ready. They're still missing some numbers. So if you go to an investor and say, oh, I would like you to invest in me, it's like, okay, how much would you like me to invest? Like, oh, I don't know how much you would give me. That's not a good indicator. I would like to know exactly how much you're fundraising and exactly why you're fundraising. What's your next milestone? Your fundraising should help you reach like a second milestone that you have that in your business. That's we see a lot of also like people when they are in the process of reaching out, maybe they didn't very much kind of look into the VC. So, I only invest in, for example, Series B, and you reach out to me and see the stage, I don't get it. Or, I only investing in health tech, but you are an AI company, so I don't know why you're reaching out to me. So those kind of things, or maybe when they apply to the process, we've seen that like quite a lot. Like in tech stores, people like you don't answer, like give some thought and give some time to the application. You just copy paste some of the stuff. Or as an investor, you sometimes receive an email and you see people writing like, "Dear, I don't know, sub Alex," and your name is Ahmad. It's like you probably copy and paste this to multiple people, so it's not like customized. Another very big mistake is that people don't build the relationship before they start to fundraise. Fundraising started even before. Like, just try to contact the venture capital, contact the investors, build this relationship, connect with them, talk to them, sort of things. Keep them posted, keep them updated, and then tell them, okay, now I'm fundraising for my business. What they already know about you. That's very like an added like that's plus for you to be able to go. Another things maybe good to mention here, as we're talking about like giving people some advices in terms of how they kind of fundraise. As we talked about understanding how the venture capital works, and they have their due diligence, they have the process. So I need to make sure that I'm working already on some of the stuff they need to ask. They call it the data room, for example. So I prepare my pitch, I prepare my financials, I prepare an executive summary, I prepare what does it take. But some of the times people fail like to prepare the bare minimums, the stuff required. So maybe they don't have founders agreements between the founders, and or the company is not yet registered. And like, how you expect me to invest? And then people say, oh, when you give me the money, I'll use the money to register because I don't want to spend my own money, but you want to spend someone else's money. And that's also, they give like very bad indicators more than two-thirds of the startups fail because of co-founders conflicts. So we not make sure that there is no conflict. If you say, okay, let's decide later on the shares between each of us, at some point you might have a problem. It's just like, I needed structure, I need it written, I need to see the agreement, I need to see the vesting terms that's there, making sure everything is clean before like the venture capital be able to join. Those are like small things that people should consider and take into consideration before like kind of reaching out to investors. Once you have this solid done, like I have it, it's structured, it's well, I'm ready now, I know myself, I'm ready. It's a good time like kind of to fundraise and go start building out your investors pipeline. It's like list of investors that you think, share this list with your network, with your mentors, with your advisors. Say, okay, I have a list of those investors. Do you know any of them that you can connect me with? This is my pitch deck. This is like a very quick slides presentations that tell me about your business story, about your team, about your product, the problem you're trying to solve, how you are solving this, what's making you unique, who are your competitors, and what are you good at against your competitors. So unique competitive value proposition. And then what's your ask, how much you're fundraising, why you're fundraising that much, etc. So
Okay, cool. That was a lot of information, very, very deep. I would go like on many points a little bit deeper, but just to break things down to the people who are listening and don't know like every word or every we said, I would love to just summarize something. So we have like we talked about two kinds of investors: the angel investors and the VCs. In the angel investment, so it could be like without like having any structure, without having any real product, but just like some group of talent, an idea, and just convincing skills, and just go like for some safety net, right?
But this is mostly people in your network or people who really understand the domain. So if you're like working on like specific health tech, and like there's a doctor that you know, or they are very much invested in the solution, so they know a lot about the solution. Those are the right people that you might reach out to. Usually in the terms they call them like friends and family and fools. We don't like to call them fools. They are angels, and then good to help. Why they call them fools? Because the risk is very high at the beginning of the company. But mostly, they trust you. They like you as a founders. They know you, and they invest because of you, regardless of the market or what's happening or what's going.
Are we talking about like something between like 0 and 50K, or like 100K, or how much? I mean, what do you describe like an angel?
It really depends on the market, but it could be 15K, it could be 20K. It really depends on the market, and it could be 500K, $500,000 from an angel. It really depends on the market. It's really depends on the startups. Sort of things. But mostly like I don't think there's numbers that I know exactly.
I mean, it really depends. I can totally understand. But you mentioned like that the equity these angel investors like receive are usually like a safe note or convertible note. Can you please like say some words like to each one of them?
Yeah. So technically, why is that? So the problem was, and why there is what safe note and why does it also exist? So before, how it works, I'm going to give you some money. I need shares. I need something in return for my investment. But at this stage, we need to set the valuation of the company, how much your company valued. So if I'm giving you 100K, is your company is $1 million, so I'm taking 10%, or is it $500,000, so I'm taking 20%? I still don't know. We still don't know. And that's going to cause a problem between the founders and the angels, where for me as a founders, I need to make my valuation a little bit high, not too high, but a little bit high. And for you want to make the valuation a little bit low. And that's what required for us to like have a higher legal team, have a process and sign an agreement and give you shares. And I need to issue shares. And there is a lot of costs. I go to the notary, and there's a lot of cost that's involved in that process. To solve this problem, that was the convertible note. What's the convertible note? It says that, okay, so we're not going to agree on a valuation. We're just going to agree on two things, and the three things technically. How much money you want to give me, okay? And and then you give me this money when I'm going to do my fundraising round with a venture capital who's going to do those kind of job for me, the valuation as well, and help me out with that, and help me out with other things. I convert your money into a shares, but we're going to agree that because you joined very early on, that I'm going to give you a discount for that. So instead of selling the shares of what usually most common discount is 20%. Usually. So and another things that we need, the third thing we need to agree on is the cap. So maybe, but then the investor will say, maybe you will go ahead and fundraise and your valuation will be 10 million. Then my 1000K is not going to do much. And that's okay, let's have a cap, which is like technically we cap my valuation into 3 million, which is kind of also, or 5 million, which is kind of also a common things to do. And when I convert, you choose one of those, either the discounts or the cap, whatever it's better for you as an investor, as a reward, because you joined very early on that return. This is solve problems that technically we don't need to go through the valuation. Convertible notes, as is the name, it's a note. So it's just like a loan. So in the note itself, there is an interest rate as well, and there is maturity date.
Yeah.
Interest rate, like it depends on the interest. It's like, okay, I need 5% interest, and I need also maturity date. Like after a year, if you don't convert your money, you need to pay me back plus the interest rate. But again, so that's what's the convertible note is. What safe note is people at YC luncheon now is very common for people to use. As an investor, I'm not looking for 5% return. This is, I can invest in a stock market and then S&P and then get 5%. And then every time there is a maturity date, I don't need for us to talk and get our lawyers to change the maturity date or postpone it for a different time. So what I thought, okay, the convertible note, the safe note, simple agreement for fundraising. So created by safe, it says there is no maturity date and there is no interest. So it's not a loan, it's a convertible. It's converting automatically after your fundraising. So you don't need to go through all of that. This is, I would say, is the easiest and best way, because you can download the safe note. Now just go to YC, the safe note. We're not going to go in technical, pre-money, post-money, most favorable nation. That's a different things, but you can download it at the same template. There is a clause in the document. If people modified it, then they need to not use it. So if you see this clause, that means they did not change anything. It's well explained. And then you can use it. So you can give it to multiple people as well. Not too many, but give it to a few people. So those are like the differences between convertible note and safe note and why it's actually existed.
Okay, cool. Thanks a lot. So what's the difference between like a convertible note and the debt?
Technically, debt is a debt. So if you take a loan from the bank, it's a debt. You have to pay it back. You cannot convert it to shares. Technically. So that's like how the debts work. I'm gonna lend me money. I pay you back. If you need an interest, it's up to you. Like then I give it to you. Convertible, if I do a round, the money will be converted. Then
if I was not able if I had to make exits, for example, or the company failed, so you cannot like have any shares in the company.
Yeah, the convertible note, because it's a note, it's a debt, then you have to pay me back if you failed, if you did not convert.
But the whole amount?
The whole amount plus the interest.
So it's technically a debt, but
it's an option to be converted if you did a round.
Okay, so this is the main
with a discount or a cap.
Okay.
So that's the kind of. But if you go to the bank and you take a loan and then you use the loan, you have to pay the bank with money. You cannot say back in the time, "Oh, I raised 3 million. I'm very successful founders. I can give you shares." and instead of giving you back your money,
Yeah, son.
I think they're not gonna like it. But
Okay. Okay, cool. Thanks. I understood like something more I was confused about in the past. Cool. So back to the VCs. There's also, I mean, you mentioned these VCs like raise money from silent partners or limited partners, and they usually like have, I don't know, maybe a fund, $500 million or whatever they have to invest that like in companies in tech or specific domain, and they usually like focus on exact that domain. And your job, like the people who work in for venture capital companies, to find like the best startups that fits these requirements, etc., and invest in them to grow the money of the investors, right?
yes, pretty much that. Some VCs are sector agnostic, so just like us, we're sector agnostic. We don't make specific on specific sector, but all venture capitals, they have their investment thesis. So their investment, what is your investment thesis? Oh, our investment thesis, we invest in female-led companies only, or our investment thesis, we do in a green tech, anything that works for the environment. Or investment thesis for us focusing on what the Explora founders that I just mentioned. So that's, they need to they agreed with the limited partners that this is our investment terms, and they need to hit that goal and achieve it. So when you reach out to them, they need to make sure that you fit their needs in terms of the investment thesis. This is before they look into that, before they look into should we invest in you or not.
Yeah.
But are you making the right fit for us as
Yeah.
what we promised the people who give us the money to invest in? If yes, then we go ahead to the next step. The next steps would be doing the due diligence, just making sure, okay, are you, what you are saying is good enough to make it to the cut, sort of things. Usually this is through the application, and there's associates who are hired by the venture capital who do the first kind of process as well, taking your application. It's like, oh, okay, they don't have validation, so it's out, or maybe they don't have a team, so it's out, or it's up to them, to their criteria. Okay, maybe some venture capitals invest in solo founders. Maybe some others like, no, I need a full team, complete team who are going to participate and do it. So there's like some reasons like the venture capital go and kind of skip. So maybe they say, oh, there is no market opportunities here. There's no competitive, or there's no technology. It's not the right time. They look into those kind of, to your traction. They look into those reasons. But if you made it, and then they probably submit it to the partners, to the fund partners, who also look into that and schedule the call with you. If you're talking to the partners, know that you are talking to decision makers who might say yes and pass it to other partners if there's another partners. If they say yes, they give you the investment. If they say no, you will just like know about it. Probably it's not the right time for them. So they reach out, maybe they keep posted, they keep updated and say, okay, if you hit this, I don't know, threshold of like revenue, or if you start making some money, then we probably discuss it at this time, at this stage, maybe we pass. So that's really different from VC to VC. So it's good for you as a founder to reach out to the portfolio of them, and so just listen to them. And also when you talk to the venture capital, just know what's your decision-making process, how it's going, what's your criteria. Understanding those will be an important. So we talked about this, and I understand, and then but and we talked about some of the mistakes, but I think there's also some kind of reasons also, it's not commonly spoken as well, that why VC not going to invest in a company, not because of the market, not because of this, but probably there's fundamental problems, and that's going to create the business uninvestable at all, not from this VC, but all other VCs as well. This could be maybe when we say, we talked briefly about like the importance of having a founders agreement between you and your founders that include vesting terms. The vesting terms means the shares that you have will be given to you within a period of time. So we agree within 5 years, you will take your 40%, 50% split between the founders as well. So sometimes it happens that people who has a co-founders and say, okay, let's be a co-founder. They register a company. You take 50%, I take 50%, or like three, they take 33, maybe, I don't know. But one of the founders, he got a job, or she got a job, and then they decided to leave the company, and they leave and they take with them like 40% of the company.
Yeah.
That makes this company uninvestable because there is like a resources, 40% of the company is actually been taken out from this company. And then if I'm coming as an investors and I invest later on as a venture capital, let's say 20%, and later you do Series A, they take 35 or 25% or 35%, then nothing left to you in very, very early stage. And then you're not going to be motivated to work in this company that's you've been diluted a lot as well. So you don't have a lot of shares to do, so you become like kind of an investable in the face of the company. Or maybe this founders, they own the IPs. You don't own the IP of the product. Maybe they were the technical, they did the platform, they did everything, and then there's a conflict between you. They left, they took the codes with them. So founder agreements might help you structure those out and make sure everything is owned by the company. There is a vesting terms, which is usually 4 or 5 years for the founders as well. Another problems also happens when we talked about the investors, the founders and the angels, and you might be able thinking this is a smart things to convince the investors to invest, the angel investors to invest in valuation that is 10 million. I was like, oh, I'm 10 million because someone I know in a different location, he just fundraised in a 10 million, and I think I'm doing the same and I'm smarter than them. I'm gonna do it. All right, it sounds fine. And then you go to the venture capital, and then the venture capital says, no, I don't think you worth that valuation, and I think your actual valuation is 3 million or maybe 5 million to make it easier to cut in half. And then the founders will feel that, oh, if I'm going to fundraise, I'm going to lose some of the money. The worst that maybe the agreement with the angel investors, they have the right to block you from major decisions, as well as like reducing the value of the company, because their investment, if they agree to that, will be cut to a half as well.
Yeah.
So maybe they block a deal from you. Another common mistakes that early stage founders, like first time founders, early stage founders, they do is remember when I said you can use the safe note to go for angel investors, but don't go too many, because many people might cause problem. Or maybe you just go and sell 40% of the company at the early stage from investors, especially traditional investors in traditional markets. You say, oh, I'll give you the money, I need 40% or 50% of the company. Then the company is on like kind of zombie, it's a walking dead, because you lost a lot of shares at little or no money. Like someone give you 50,000, I'd need 50%. For you, maybe 50,000, it's a lot of money. So you agree to that, and then venture capital not going to invest because there's no much of equity left. Those were the stuff that makes the company kind of like, they call it like it's a zombie, it's a dead company. It's a common kind of fundraising campaign to overvaluate your company or do that. That's like a kind of problems that you need to avoid as well.
100%. Cool. They say usually like VC is an expensive money. Why do you think, or do you agree first? And why do you think it's expensive?
Do I agree? That's controversial, but yes, I do agree. It's expensive money because if you look, probably you're gonna build $1 billion company, and you're gonna give 10% of it. You don't know you're gonna build a unicorn. You don't know you're gonna build big money, $1 billion company. So you sell that for 1 million, maybe in return of 10% early on. So that's money will be way more when you are a unicorn. That will be way more than the 1 million. That's why they call it expensive. If you can be able to continue grow your revenue, you don't need to fundraise. It's completely fine if you can be able to do so. Traditional businesses or big businesses or manufacturers can easily do so. It's less. It's more challenging for a startup to do so, if we're gonna put it that way, and it's less common for innovative startups because of they want to hire the best talents in the world. They want to be competitive. They want to spend a lot of money on the market just to uh, optimize and have like a big cut of the market they are working in. So there's a lot of expenses early on before they start to make money. So that's why they need an investors. So it's also a necessarily thing for many founders. Others not. It depends. But if you can survive with your revenue and survive with making your own money and help you grow, then it's why not?
Okay, cool, understand. Cool. I can talk about that like all day, but I think we're limited in time. So I would like to give you now the stage if you would like to add any like advices, any like insights you think they are like valuable and people should know if they are fundraising.
Before like advice when people fundraising, I would just like say general like kind of advice also for entrepreneurship. It's know what you are getting yourself into. It's not like an um, easy process, and I think you can tell a lot as
Yeah.
well about this as being founder yourself. It's really challenging. It's not an easy business. It's not like I don't want to have a boss. That's why I'm gonna create a company. Your investors will be your managers. They can have the right to fire you if they have the right amount of shares. So it's a hard process, but also this is the perfect time for people to create a company with the new tools available around you. It's never been easier to create startups. You can now access any knowledge you want using ChatGPT. You can create a website using no single line of code. You can do whatever you want, create a logo, create a social media, and whatever you want to do, it's available, and the knowledge is available everywhere. So this is the right time. I think it's a great time for people to start considering if they want to become founders. If they are struggling with the problems and they think they have a good solution, it's worth a shot. I think for the fundraising, again, I would say build a relationship with the investors beforehand. Know who are you talking to. Do your own research. Understand that fundraising, it's hard. It takes time, average 6 months. It's kind of full-time job. So you have to do as a founder, plus your other full-time job managing the company and running the business. So it's not like an easy, come prepared for that. Know your number. That's very much important. Like know your number as well and memorize it. And then how much revenue you have, who downloading the app, how many of them are re-entering the app again per day or whatever. So know whatever number. Make your idea simple. Your storytelling, make it great. So make it a clear idea. Make it clear, and also like just another tip, just like when a VC asks you questions, just answer those questions, not try to turn around. Be simple, be straightforward, be direct, answering those questions, and hopefully, the investors will agree in the terms, and then you're not going to just have an investor, you'll have a business partners. Many venture capitals look at their businesses they get in their portfolio as their own business, and they would like to do everything it takes to make it a success. So choose wisely. They call it the smart money. Choose wisely people who can add value to your business.
100%. Thanks a lot. You just nailed it. I mean, I totally agree. Like on all the points you said, especially the first one when you said a lot of people leave the jobs when thinking they don't have a boss anymore, Actually, you do. You have your client, you have your like
Mhm.
investor, you have
Awesome.
like a lot of things can go wrong. I can totally agree. Okay, cool. Thanks a lot. I have just a few rapid questions if you'd like to answer.
Sure.
Um, sure. Just whatever comes into your mind, just say it. Okay. You're like number one entrepreneur that inspires you and you love.
Oh, that's very tough one. It's very, very, very hard for me to decide. It's very long conversation. We'll do that later. But
Maybe
it's
you should go to another episode.
just a pick. Yeah, it's there's so many inspiring people that you see. There's a people who you like for a business or two, but you don't agree on some of the stuff they are doing. There's here and that many. There's a great people all around, so it's very hard to pick one.
Okay.
We did not agree on hard questions. We agreed on
That's pick
easy
yourself. That's
questions.
pick yourself.
So do you have one? Do you like? Do you have your?
It's very hard actually. I don't have like a specific answer as well. When I'm thinking about that. To be honest, I can like pick many, and from each one, like I have like some my favorites.
That's exactly,
Yeah,
yeah. Exactly.
character and characteristic, etc. He did like that very good. They did that very good. This is why I'm starting this show, because I find like every story interesting, and each person has like one strength, and I learn like from that.
Yeah, definitely. There's something that you can learn every single person, and then you can do that. It's hard just to have like just one person that doing everything right.
Yeah, 100%. Okay, next question. If there's one problem you would like to solve for entrepreneurs, what would that be?
Access to investment. That's what we're working on. I believe this is also like a big problem for many. There is still in the market a great unconscious bias. There is still in the market great gaps between underrepresented communities as well. We talked about migrants that might get lucky access to investment. While we talk about refugees, they might hard for them to access the investment as well. I think there's still great opportunities that we need to find, not central in a big ecosystem, or just because someone want to succeed have to be in the Silicon Valley. Not this anymore. You can be anywhere. So we try to make sure that they have access to the support they need, no matter where they are.
Good, great. What do you think is the future of entrepreneurs or the entrepreneurship in conflict zones?
I think like entrepreneurship is the viral role. Like it's a very much important role they play in terms of solving the problems, creating the peace they want, rebuilding their own countries in a way they think it's better. This is kind of taking the initiative back and solving our own problems, and this is how nation been built.
Okay, great. Last question. Where can people find you and like connect with you?
LinkedIn or my email. LinkedIn, same name. You'll probably see it on the screen. It's Ahmad Sufian
I will
Bayram.
put it in the description. No problem.
Perfect. Yeah. So it's that, or send me an email. It's AHMAD, Ahmad SB, at blackbox.vc. Also, if you have any questions or you would like to brainstorm, so what I said resonate with you, and you would like also to contribute to help with that, please feel free to email me.
Okay, great. Thanks a lot. I really, really appreciate it. I learned a lot, and I think our listeners gonna learn also like a lot. I really appreciate it and enjoyed talking to you. Thanks a lot, Ahmed.
Thanks to you, and thanks for the time and the good conversation.
Okay, great. See you.
Bye bye.